Hello, Kay with Zuna. Let's talk a little bit about trading stocks using volume breadth. As promised, I mentioned that I would do a video using volume breadth, market internal tool, this indicator here, uh, and how we can use that to trade stocks in the U.S. stock market. It's a fairly simple strategy. This is the way I would set up my monitor if I'm planning to trade stocks. Before you can start trading anything, obviously one of the key components is understanding what is the market bias. Okay, so tomorrow I'm going to trade stocks. Okay, how do I start? Where do I even begin? What stocks am I going to buy? Or am I going to be looking to go long? Am I looking to go short? Will I have a bias? What is the trading plan? So one of the key components is market bias, understanding market bias. Uh, if you look at a lot of the indicators that I make available, you'll notice that there's a theme, and one of it is I try to drive home the point how important it is to understand the market bias and the different tools that I provide. If somebody just sits and looks for just and thinks just for a little bit, you'll see that I've provided enough indicators where you can get market direction, market bias down, and then there are other tools that you can provide for locations of entry, which areas you should be looking for entry, and then there are other tools that you can use for actually your entry. I don't come out and blatantly say, okay, do this, do that, because in order to the individual has to do their part and just think a little bit. And if you look at what I provide, you'll see that you have all the tools to pretty much put together the tools to put together a trading plan or trading strategy. So in this video, let me quickly go over the volume breadth. There are other videos that you can watch on my YouTube channel, or which is Zuna, ZUNAA 2, the number 2. So it's Zuna 2. If you just put that, you'll see my channel. There are pretty much educational videos about different tools on volume breadth. You can get a good basics on watching some of those videos. But this is the zero line. That's 80%, minus 80%, 50%, 50%. We've mentioned in prior videos that if volume breadth is trading above zero, obviously there's a bullish bias in the market. Now, it doesn't mean if it starts hanging around zero and not going up to 50%, then it can break below. There's no guarantee that it's going to stay there, but it's when you see it, when you get used to it, you'll see how it acts. When it comes to zero and it quickly bounces back up like it did here to 50%, then you understand that there's a bullish bias. In general, as long as it's above zero, that's all you need to know. As long as it's above zero, even if it's coming down, there's still a bullish bias. Obviously, if it's coming down, there's less of a bullish bias, hence coming down. Oops. So this is how you would start your day, looking at volume breadth and where it is and what it's doing to get your market bias. This is your internal bias, okay? Let's say you want to trade stocks. So you have your stock chart set up. If you have indicators that you use for your entry, then you would set those up on that. You also, obviously, every stock trader that I know of, they have one eye on the futures market and other type of instruments. But so you're going to have the futures. I'm going to be focusing on the Dow Jones stocks, the Dow 30. So I have YM down here because futures tend to, not always, but sometimes they will lead the market, the stock market. So I would want to look at that. And if there are any sectors you want to look at, then you could put the sector ETF or index down here. And then you could have your quote screen with the stocks that you're looking at, whether if you're looking at all the Dow 30 stocks within that index, or if you have your own special uh, set of stocks. You could use S&P 500, you could use the Nasdaq 100, you could use specific sectors. You could, for example, say, well, I want to look at all the energy stocks. I want to look at all the, you can get as specific as you want. I want to look at all the consumer goods stocks, the utilities, etc., etc., financials. So those are, you could limit yourself that way, and then the beginning point is knowing, well, what are you going to do today? Are you going to be looking to go long or short? So the volume breadth gives you the bias. because without something like that, how are you, the only thing you have is, unless you have a really good way of determining the trend, you're really not going to know if you should focus on going long or focus on going short. And with trading stocks, the nice thing is that you can focus on several stocks. You can go long on several stocks, or you could just use one stock. So we would begin. We see that the volume breadth is above zero. We're going to be looking to go long. We have our stocks in our scanner here. This is actually just this quote screen, but you could use the TradeStation has a scanner, or you could use other scanners if you need. There are some really good free scanners. If you want those, just give me an email and I'll recommend which ones. So we established that the market bias is up, or there is a bullish bias to it. So now, which stocks are we going to trade? Okay, you have your scanner here, so we're going to ignore all the reds. I just have a scanner with or quote screen with the net percentage. So I'm going to be whatever is up here, because the highest percentage will just come up. So I'm going to be focusing on here. So obviously in the morning it wouldn't be 2%, or these, but it would still, relative to the others, these stocks would be at the top. Now you can also look at so we see JP Morgan, Bank of America, these are at the top of our quote screen, so we're going to quickly focus on those stocks. You can also have the sectors for the stocks too, and take a look at the sectors quickly to see if this is just a slight move or if there's actually a trend in there. So you would just click on JP Morgan, your chart would load up. Okay, Bank of America, your chart would load up. And now I want you to take a look at this action, and I want you to take a look at the stock market, the Dow. Now, which would you have rather traded today? YM, or would you have rather traded a nice stock that's trending like that? Okay, and so it all starts with the volume breadth, because that gives you quickly what the bias of the market is, because the volume breadth opened up. In fact, when it opened up, it went above 80% and quickly came back down, but it didn't open up and go down, so that quickly gives us market bias. It's as simple as that. Okay, and it stayed above zero, and as long as it stayed above zero all day long, you'd be fine just trading long. Now, obviously, YM didn't do that, so this is the nice thing about starting with a volume breadth, going to your quote screen, picking out the stocks that are performing best, and then it's just a matter of, so you choose Bank of America. It's just a matter of timing your trades. Now let's look at the timing of the trades. I put down here value chart indicator. You don't need value chart indicator. You can use any indicator that you like, just as an example, and it's not important that you use value. There's nothing special about this indicator, but just simple entries. I marked all the entries that would give you long signals, okay? And I marked them on here. Okay. So you have 1, 2, 3, 4, 5 different entry points to get long. It's as easy as that, simple, and you could have done that on a couple of stocks. Okay, you could have traded both of them at the same time. So if you create a good plan, trading doesn't have to be that difficult. It's just a matter of having the right tools, having a little bit of experience. Obviously experience is key, and knowing what to look for and using the proper tools. Now, if I put the value chart down here on YM, you wouldn't have the same. Because normally you can get long here, scale out, hold a fourth, get long, scale out, hold a fourth. You would have been able to, at least on a couple of these positions, hold some of your position. That's pretty much the strategy I mentioned earlier, and I said I would make a video about it, and I just covered it. The key is to wait about 15 minutes once the market opens. Wait about 10-15 minutes, unless you have good reason not to. If you think we're going to just take off, if there is a way that you have that you can make that determination, then don't wait 15 minutes. But wait for about 15 minutes, get a good gauge on the volume breadth, see what it's doing. Okay. Wait 15-30 minutes ideally, so that would be around 10 o'clock. Okay, it would be around this area here where I am right now. By that time, you have a good idea what the market's doing, and you also see what price is doing. And you can see the divergence between what the high-performing stocks, I'll just go over them, high-performing stocks did, while the futures were just selling off. That's a huge indication by itself. Anyways, without something like a volume breadth, you couldn't make that determination. You wouldn't know which stock to trade in these 30s. So that's the value of an indicator like the volume breadth. I hope this helps you guys. Give it a shot. Just try what I mentioned a couple times for yourselves in real live data and see what you think. Thanks for watching and hope it helps you.